Hi, I'm Stacey from Chelsea Financial Services. Over the next 12 months, around 800,000 lucky teenagers who are turning 18 will get an extra birthday present in the form of a windfall, as the first wave of child trust funds, or CTFs, and junior ISAs start to mature. They could be receiving anything from a few £100s to thousands of pounds, depending on how much and where their parents invested. In this video, we'll cover what is a CTF, its replacement, the Junior ISA, and what it could all be worth. And finally, we'll give you some ideas as to where you might like to invest for your kids' future. So what is a CTF and Junior ISA? CTFs were launched in 2005 by then-Chancellor Gordon Brown as a scheme to give every child some savings. Available for children born on or after the 1st of September 2002, children who are now starting to turn 18, the government contributed an initial sum in the early days, before the scheme was stopped in 2011 and replaced by Junior ISAs. Up to £9,000 can now be invested in a Junior ISA or CTF on behalf of a child each year, and the beauty is anyone can contribute: parents, wider family and friends. Any gains or interest paid are tax-free, and the savings cannot be touched until the child turns 18, at which they can either take the money or roll it into an adult ISA. Children born between the 1st of September 2002 and the 2nd of January 2011 will have something saved somewhere, even if the parents don't know where, or were even unaware of CTF's existence. If they didn't open the CTF themselves, the government opened an account for them. If you think you may have a CTF but are not sure which provider it's with, you can get help by visiting the link below or via the video description. So what could the CTF windfall be worth? Some £700 million of CTF assets will mature this tax year, and a total of £7.5 billion over the next decade. Additional money will also start to mature from Junior ISA accounts. Savings into both could be put into either cash savings or stock and shares accounts, and HMRC statistics suggest that cash has been more popular, with more than half of CTF's vouchers allocated to bank or building society cash accounts. However, those putting savings into cash would have missed out on greater returns because, despite experiencing two stock market crashes in the intervening years, the global financial crisis and the pandemic, stocks and shares have performed better. Cash CTFs would have turned a £1,000 investment into about £1,715 today. Not all funds were available for CTFs, but to give you an idea, the average UK equity fund would have turned the same initial investment into £2,310. If a parent or guardian chose to invest overseas, the amount would become £3,393 in the average global equity fund and £3,681 in the average emerging markets equity fund. The best performing fund over the period was Baillie Gifford Global Discovery, which would have given a huge windfall of £12,162. Active Framington Global Technology Fund is also in the top 5 best performing funds and would have produced £11,244. So how to invest your Junior ISA today? I asked 4 members of staff with children where they were investing their Junior ISAs today.
I have 2 children, and my son was actually born in the first regime of child trust funds. So he was lucky enough to receive £250 from the government. But my daughter Isla came along a little bit later and only got £50 of child trust fund vouchers. At that time, child trust funds were fairly limited in their choices and charges were high. So as soon as the Junior ISA was launched, I transferred both of my children's child trust funds to Junior ISAs. Our general investment strategy has been given, they had sort of 18 years, is to invest in high risk assets like India, emerging markets and gold. The key thing which we've done is we've invested monthly. We think that's always been a very good savings discipline. And secondly, you get the benefit of pound cost averaging and not trying to time markets. Also, on around their birthdays, I have invested small lump sums each year to hopefully give them some extra growth. On the investment strategy, given that I'm a big believer that smaller companies outperform over all long-term periods, I should have invested more in smaller companies. But when Chelsea launched their own range of managed funds in June 2017, I switched all of the children's Junior ISAs into the VT Chelsea Managed Growth Fund, which gets all of our attention on an ongoing basis.
We invested in AXA Families and Global Technology Fund for my husband's two older boys, as they were interested in tech, and it's done very well for them. Our three younger girls have the Chelsea Managed Aggressive Growth Fund. I'm hoping it will pay for their university fees so that I don't have to. Their grandparents like to add to their junior ISAs on birthdays and at Christmas and then just buy them a small present. I also add on birthdays, as well as contributing a small monthly amount.
My eldest son, Alex, was born in August 2010, so he was just about eligible for the £50 from the government. I opened a cash CTF initially because I knew the scheme was stopping, and with 3% interest rates at the time from Yorkshire Building Society, it wasn't that bad. As soon as it was possible to transfer the CTF to a junior ISA, though, I moved it across, investing in Rathbone Global Opportunities Fund, and it remains there today. My younger daughter Anna's junior ISA is also invested in the same fund. My mum invests a small amount into both accounts on a monthly basis, but I add money as and when I have it to spare.
I have a little bit of money put aside in a junior ISA for my 3-year-old son, Alexander. I chose the VT Chelsea Managed Aggressive Growth Fund too. I don't pay anything into it myself at the moment, but my parents make a monthly contribution.
And while I don't have children of my own, the beauty of a junior ISA is that you don't need to be a parent to contribute. Just last month, we set up a junior ISA for our 6-month-old niece, Nyla Rose, to potentially help with university fees in the future. We contribute £20 a month, and as she has an extremely long time horizon, we're investing monthly into VT Chelsea Managed Aggressive Fund, with top-ups at Christmas and on her birthdays. For more ideas on where to invest a junior ISA, or perhaps your own ISA, be sure to check out our ISA guides or visit chelseafs.co.uk to begin your own research.